This one stock is about to skyrocket. It's a retail trading platform. So it's based in China, and most of their customers are Chinese speaking or Asia Pacific region citizens. The company has $55 billion on its platform. So that's up over 30-40% year over year, a huge increase. And now the question is this Robinhood of China going to be investable for US citizens, which I assume to be most people watching this video or anyone trading the US market, given that there's been some chop the last month, and it's been largely based on Trump and Xi coming into disagreements, or at best miscommunications regarding rare earths, tariffs, and most recently out of the South Korea meeting, all is good, all is well. The retaliatory tariffs have been walked back on China's end, but stock market still sold off for like 5 days. So maybe that was profit taking. I'm not a macro head, but I do know that China into the end of the year seems like a good idea. A lot of big investors think that's a good idea. And this company, ticker symbol TIGR, Up Holdings, seems like a good way to play that. So let's jump into this cash flow positive company earnings information and also the chart, which looks awesome. Not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so this is Tiger Up Fintech Holding. Might have left out the fintech. It's kind of a Americanized name, it sounds like, but the point that we have to worry about is, look, they don't need much cash. So cash flow positive. And if we look at recent raises, $100 million about a year ago at $6 from Deutsche Bank and US Tiger. So, I mean, we can take a look at what bank is that? Is that related to Tiger Global? You know, that Tiger Cubs. I don't think so. I think Tiger is just a common name, but it's kind of interesting that they would name themselves that at all. So yeah, they're a broker dealer. It's not a bank, securities firm. So it all checks out as to what they do. They are basically a Robinhood online trading platform. And the question is, if Robinhood is worth, whatever it is, this is a $2 billion company. If we look at Robinhood, it's got to be closing in on 50 billion or well more than that, 100 billion. Yeah. So can they grow into the footsteps of Robinhood, or is the fact that they're Chinese listed on, US exchange, is that going to be an impediment to that growth story? But again, not really here to talk about holding this company for the long term. The reason it's interesting is, well, the revenue is sufficient to be interesting. The client assets are solid, up almost 30-40% up year over year. But more importantly than the number, this stock can skyrocket. So let's look at the actual chart. This is what we got going on here. This is the potential. It's insane, truly. 4 to 15 in, a couple weeks. And then if we look right now, we're sort of leveling off. I'm drawing a line here somewhere along here. Kind of matches up. This is kind of voodoo, but also kind of not, around $10 whole psychological level. People really notice those whole levels. $9 being important as well. We can see that right here. So the whole numbers definitely matter. 11, kind of in here. It's, I'm not going to say every whole number certainly matters all the time, but 10 is a pretty clear cut line. And right here, it's giving an opportunity to get in that we're kind of forming something, possibly. We don't get to decide what the stock's going to do, but everyone's looking at this, and as opposed to buying it like here, right after the Trump Chi rare earth fiasco, all the Bitcoin holders liquidated, well, the altcoin holders liquidated. You don't have to bet on a move up or anything, market related right now. You don't have to bet on catching a falling knife. You don't have to, jump in here or anything like that, like saying you're buying the dip. We're not really buying a dip here. We're buying like a upward consolidation sort of situation. And we've kind of got a channel, whatever you want to call it, a flag. It's not, I'll stop throwing out words. This is what we got, okay? We got really tight days. That's what we have. So there's low risk. There is a rising moving average, crossing of moving averages. That does matter. So that could be a good opportunity. Here's, kind of another crossing of moving averages. It kind of looks messy here. I'm just going to shut up about the crossing of moving averages, but definitely a big rebound and near that $10 whole level. So that's plenty sufficient to get interested. Now, as far as, risks, some people say I'm not going to buy any China related securities stocks at all, or, I'm not going to put money in anything related to China. That's fine, but you're going to miss out on some big runs like we just saw. And you're also, Baba and Baidu have gone on massive runs as well. So you're missing out on some serious opportunity here. I mean, this is crazy. Kathy Wood is in these stocks. I know Kathy Wood is more risk on than a lot of people, but she's also very institutional. So that's the argument for some of these companies. I think Tiger is super akin to a possible Robinhood growth story. Robinhood itself is not super viable right now after this earnings reaction. So here's the idea, TIGR. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help and a free Discord trial, head over to stockscommunity.com. You'll see some testimonials and our first review of Stocks Community's course.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.